And so a lot of people are reaching out to me saying, Kev, would you be buying gold at this point? And I said, no. You know, even though they tricked everybody by pushing price to all-time highs, that was only to be able to offload those long positions that we now see here. How's it going, fellow traders? Welcome back. Welcome back. It is May 28, 2023. Haven't seen you in a few weeks, but it's time to get back into taking a look at the latest set of data that was released from the CFTC. Here's a brief snapshot of the positions held by the institutions as of May 23rd, 2023. And so let's begin by taking a look at gold. How are you, everybody? Glad to have you back. We're going to be taking a look at what's been taking place over the last several weeks with respect to the positions held by the institutions. Now, if you haven't yet followed us on our Telegram channel, you should get there, because we've been posting updates about what's been happening with the markets over the last few weeks. So nobody there has missed any of the crucial information that has come our way. All right, so let's start by taking a look at gold. What do we see with gold, ladies and gentlemen? We see that recently the institutions have been taking profits on their long positions. Now, this is something that I was pointing out a few weeks ago. I was pointing out that the euro data was showing us that the institutions were massively long. And when the banks are massively long, they can't keep adding long positions. What they have to do is they have to take profits on those long positions. And when they take profits on long positions, that fuels moves to the downside. And so a lot of people are reaching out to me saying, Kev, would you be buying gold at this point? And I said, no. You know, even though they tricked everybody by pushing price to all-time highs, that was only to be able to offload those long positions that we now see here, okay? May 9th, 266,000 down to 255 and now 236. That's a significant amount of long positions. Who do you think took those long positions off the banks? That's right, it's retail traders, okay? That's why I mentioned to everybody, don't be buying gold now. We want to be buying gold when they're buying gold, not when they're in profit-taking mode. All right, so if we take a look at long positions, they've been reducing them. Short positions, they recently added. That helped fuel the move to the downside. And as you see, that's exactly what we got, is a move to the downside. All right, so just be aware of that going forward. Now, if we look at the positions held by retail traders, currently they're at 58% long, okay? It was a lot less than that. But they accumulated those long positions as the banks were tricking them into making them think that price was going to start heading much, much higher. All right, folks, let's take a look at oil. So oil, when we look at positions, we can see that, you know, May 23rd, 317,000, that's the 13-period average, okay? So they're not much more aggressive than what they have been over the last 13 periods. That's 3 months. That's a lot of time. So they haven't really been doing anything with their long positions. On the other hand, we look at shorts and we see they're 124. 13-period average is 109. So they are above average, but look at the coloration of the cells. They're very blue, meaning their positions are very cooled off. If positions are cooled off, that means they're not aggressive. And if they're not aggressive, that means we shouldn't be thinking that they're accumulating these shorts in order to push price down significantly. It's a short-term move, and as you can see, we got that push to the downside, but it was short-lived. It came into contact with institutional buying here. This is the green zone that we have located on our charts, and we see a slight push to the upside. So as far as I'm concerned, there's not much going on with oil, so I'm staying out of oil for the time being. There we go, that's better. Here is the US dollar, okay? And what we can see is the long column is cooled off, short column is cooled off. They're not doing much with their positions, okay? Because they're not really focused on the dollar right now. They're focused on other things. like taking profits on gold, taking profits on the euro. And we'll get to the euro and we'll show you exactly what's going on there when we do. So right now, there's not much going on here. So we skip it. And we take a look at the Aussie. Aussie, look at the short column. They are increasing their shorts from 90,000 to 97 to 102,000, well above the average size of 85,000. Okay. And what did we see with the charts? They dropped price significantly. Okay. Now, what is happening? Well, price is coming down into an institutional buying zone. So we'd suspect that likely we're going to see a short-term push to the upside. Now, whether or not they're going to continue that is difficult to say at this point, because look at long positions. 41,000, 43,000, upwards of 53,000. But we were at 53,000 or 52, 54,000 just a couple weeks ago. So it doesn't really mean anything. If this starts to climb even higher and these cells start to become red, then we know they're starting to aggressively accumulate their long position. But what I can tell you is 102,000 is very close to their all-time maximum size of 117,000. And usually when price gets to maximum size, we start to see them taking profits, which will fuel a move in the opposite direction. So as price was dropping, what were retail traders doing? They were adding to long positions, okay? The exact opposite of what they should have been doing. And so now 89% of their positions are long, all right? So they'll probably push price downwards in order to get retail traders to switch their longs to shorts, and then they'll start taking profits on short positions, and then they'll fuel a move to the upside. Same routine over and over again as you've been seeing. USCAD, interesting one. Look at the long column. You see how since March 7th, it's been aggressive. They've been aggressive with their long positions. Look at shorts. They've been cooled off. So the main focus that they've had is in long positions. And so we see that price rallied, it paused, and then it rallied again this past week. So what are we seeing here? Well, what we know to be true is that price contacted an institutional selling area. So overall, over the longer period of time, we should see more pressure to the downside. All right, but for this to really kick in, we got to watch this short column, because what we want to see are these numbers get at least above the 13-period average and then continue to turn those cells into red, meaning that they are focusing on shorts. Until that happens, taking short positions would be lower odds. All right, so we should refrain from doing that. And again, you look at retail traders, they're mostly short. Banks are focusing on long positions, and retail traders are accumulating short positions, 86%. Exact opposite of what the non-commercials are doing. It's another reason why you're supposed to be focusing on non-commercials and not commercials, which all the textbooks and so-called CFTC experts are telling you to do. Okay, once again, only at our school are we teaching you the reality of the markets, and we prove to you over and over again in these videos how it is that the non-commercials are exactly the guys that you need to be following. Let's go over to the US Swiss franc. Long column is blue, short column is blue. They're not doing anything with their positions. We see price moving to the upside with the dollar strength that's been coming in across the board. And that's pretty much it. Okay, there's not much more to see here. Retail traders are mostly long, 57%. But like I said, there's not much to go on here based on the data. And so now let's go over to the euro. Okay, so this is the one that I was talking about. So the euro was at the highs here, and everybody was asking me, should we go long the euro? I said, you only want to go long the euro when the banks are going long the euro. And so the response was, well, if I look at the CFTC data, I can see that they are already long the euro. They are going long the euro. Then I told them, no, they were going long the euro. Now they've reached maximum positions, and now they're ready to take profits. And when they take profits, it's going to fuel a move to the downside. And this was my target right here, folks. And look where price dropped right to my target. Okay? And I said to everybody that they were going to take profits before they took profits. And now we see over the last couple weeks, Their positions went from 260,000 to 258 and now 250,000. See? Proof is in the pudding. I told you they were going to take profits, and now we see the proof of it. Over and over again, I'm able to tell you exactly what's going to happen before it happens. So, should you be buying the euro right now? No, you should not. Should you be shorting the euro right now? No, you should not. Why shouldn't I be shorting since it dropped? I shorted from up here and closed down here. Why? Because I knew that profit taking was going to take place. And I knew that it was going to drive a move to the downside. And I took advantage of that move and I made nice profits. But would I want to hold for a longer term play? No, I wouldn't. Why? Because the banks are not shorting. I'll short when the banks short. I'll go long when they start adding back into long positions. But I don't think they're going to be adding into long positions anytime soon because they just reached maximum size. So they need to take profits on those positions before they do anything else. All right? So as price was dropping this whole time and I and other members were shorting, guess what retail traders were doing? They were adding longs. Okay? Who do you think that the banks are offloading those long positions to? That's right, retail traders. 82% long right now. Okay? Once again, retail traders being suckered in because they don't know the realities of how the markets work. All right, folks, let's take a look at the pound. Look at the longs. Okay? They've been increasing, but in the last week, they took some profits on long positions. Same reason why the gold did the same thing. Was because they knew that the drive down in price was going to also push gold down and was also going to push the pound down. So they took this and used it as an opportunity to close off some of their long positions. So they dropped longs from 77 to 69,000. They just recently removed an institutional supply area, which tells me over the very long period of time, we're likely going to see a push higher take place, okay? Because they just removed the roadblock. Does that mean you should buy it now? No. I'll start buying when I see the banks start buying. But wait until they finish this process of profit taking and then look for those signs, okay? Right now, retail traders don't know what the heck to do with the pound. They're 55% long, so there's not much to see there. All right, US dollar, Japanese yen. Look at this big increase here. Big increase in long positions. 83,000, 94,000, now 117,000. Okay? Who was the one that pointed out that institutional buying was taking place here? That's right. It was us. I told you that there was going to be pressure to the upside here because institutional buying was in play. All right? You see how price reacted short term to this area of supply, and then now it's starting to head back up. That's right. I've got targets at 144.21, and I am in long this this asset. Okay, I am in long. That's my target, 144.21. Shorts are very cooled off, so I'm not worried about them coming in with short positions right now. Maximum size is 237. Okay. So do you think I'm worried about them reaching maximum size? Not in the least. We're at 117. We're just getting started. And maximum size is 237. You know, it's the good news. Retail traders are getting in short. Retail traders are getting in short. 76%. I'm getting in long. I'm doing the opposite of what retail traders are doing. And I will profit handsomely from it. All right. There you go. Let's take a look at the last one, Kiwi. Look at the column. Not much going on in the long column. Very cooled off. And shorts, 22,000, 16. They recently increased them to 17. We see a drop. Next week's data will probably show us a big increase in short positions. So what's going on here? Well, they just removed an institutional buying zone, which clears the chart for a move lower. I will point out that Aussie is also hitting demand. So is this going to cause some move to the upside? It's possible. We're getting mixed signals here. And the reason being is because these moves are not being driven by an increase in short positions. Okay? So if that's not what's causing this drop, then this is not going to be sustainable for a long period of time. In fact, we won't know for what period of time this move to the downside will be sustained for. So you don't want to get involved when that is the case. All right. What I can tell you is, retail traders are mostly long at 94% as price is dropping. So again, they're doing the exact opposite. All right. At some point, they will switch those longs for shorts. And then we'll see a short-term move to the upside. Okay, ladies and gents, that is it. Hope you enjoyed it. You got to come join our school. We just started a new level 1 class. We're teaching everybody about how to locate institutional supply and demand zones on the charts, how to read the CFTC data, so much more at the school. Come join us, www.whiteoakfx.com. Thanks. Have a great weekend. We'll talk to you soon.